also have some part of this imposter syndrome. And then at some point I decided that I should not doubt myself. Like, if I'm here, I'm the right person for this job. But I should always doubt my instrument. The point is that I know that I need to be efficient because I need to finish everything by 5. Because at 5, I would go pick up my kids from kindergarten, and I don't want to lose this time with them. So I know that I have to be super efficient.
And how do you find out your thing, your superpower, your hedgehog strategy? How do you find it? Is there a methodology?
No, I think this is a $1 billion question. I'm not even sure I have found it. Every founder, they have in their mindset their perception of themselves, of their company, but it's not always this that is the hedgehog concept. So you should be willing to take the feedback from the customers, from the market, and apply it so that you actually understand where your capabilities can put you as one of the best in your area. And for example, if you're entering an industry, you cannot offer something to all the stakeholders. You need to pick the stakeholder who needs you the most. You start from them and you build up and build up and build up. And in the end, you might be interesting for all the stakeholders, even though this is very low probability generally for any business.
This podcast episode is supported by EBRD. Support to small and medium-sized businesses is an important part of the European Bank for Reconstruction and Development's mandate. Activities to support small businesses include direct and indirect financing through partner institutions. The EBRD's Advice for Small Businesses team provides the knowledge, the network, and the skills to help emerging businesses innovate, thrive, and succeed.
Dear community, welcome back to the Recursive podcast, where we dig into the minds of innovation leaders in Central and Eastern Europe. Our guest today is Diana Aladzhova, an experienced investment manager and partner at the first Bulgarian mezzanine fund, Silverline Capital. But she's also a founder of the cloud-based provider CFO Services, called CFO Insights. Diana has background in banking and in the private sector, with a focus on investment structuring, due diligence, financial analysis, and company valuation. She holds a master's degree in finance and private equity from the London School of Economics and is a Chartered Financial Analyst, a CFA. Diana, welcome to the Recursive podcast.
Thank you very much for the invitation.
Yes.
I'm happy to be here.
I'm also very happy that you're here, especially because just before you, we had a founder that you recently invested in. And we've been tracking your portfolio, but what I find interesting about you is that you're not only an investment manager, but you also have your entrepreneurial path, your own entrepreneurial path. So in a way, I imagine that you relate to the founders that you're investing in a totally different way. And in this sense, I have a couple of questions, and in these, I'm going to try to bring you back in time of how it all started. Maybe those little pivotal moments that laid, your path in the future ahead. Why were you so interested in the alternative ways of financing a company? Why equity financing at this point when you started studying it in London School of Economics? That wasn't much of a topic in Bulgaria. There was no ecosystem back then, right?
Yeah. Well, back in my 20s, I actually started my career in banking.
Mm-hmm.
And back then, this was my dream. I was thinking that banking is the career path for me. Then I started and I realized I actually enjoy finance a lot. But what I missed was the connection with the founders, the connection with the companies, and being more involved in the company structuring, operations, and general growth plans. So then I started researching, and I figured out that private equity might be the best industry to get into. But so to say, this was 2011. So I checked where I could do a master's in finance and private equity, and the only place I found was London School of Economics.
Oh, wow.
Then it was a very low probability that I would be accepted there because I had studied in Bulgaria before. I didn't have anyone I knew that went to LSE back then. And the percentage of acceptance of applicants was approximately 1%. So I decided to go to a consulting company and ask what should I do in order to get accepted to the LSE and this master's in particular. And they told me that there is no chance and they don't want to take my money for nothing because I didn't have the chances to do it. So then I decided to do another thing. I decided if I base my application more on the other activities that I have done apart from just studying and working, like all the NGO part and social entrepreneurship that I had done before, other projects that I had supported, and if I did well on the GMAT and the TOEFL exams, there might be a chance after all.
Okay.
So I studied like crazy, and in the end I managed to get very good grades both on the GMAT and the TOEFL exams. And I put a lot of efforts in my application form, the letter of application. And I hope that someone will read it and that after all there will be a chance. So fortunately, I was accepted in LSE, which was huge for me back then. And then I went there. I liked it a lot. I met amazing people. Even I work with some of them right now in Bulgaria, like Bulgarians who I met there, and then they returned after a couple of years.
It wasn't that impossible that Bulgarians,
No, not at all. But with my experience back then, it was hard. Like if you had studied, for example, in another UK university for your bachelor's, and then you apply for master's, it's a clearer way to get into it. But I was studying in Bulgaria, so I didn't have the right credentials to start with. But then I anyway decided that I must try, because the only way you understand if you fail is if you try. Otherwise, you fail 100%. Like if you don't do anything,
then you have at least 1% chance.
Yes, exactly.
Right. Okay.
So I studied there for my master's. I found it really exciting. I liked the way they were teaching because it was based on cases and not on textbooks only. Like we had to discuss business models, which I liked a lot. And then I decided that I want to go back to Bulgaria and work private equity here. The problem was that there was almost no private equity in Bulgaria back then. But I really had decided I want to come back, first because I was feeling there might be a higher impact of my work here in Bulgaria, and second because my family was here, my social environment was here, and my boyfriend, now husband, also was here. So it was a clear decision. I came back during one of the holidays, and then I realized that I don't know anyone in Bulgaria who does anything in terms of private equity. I started researching, and then in 2012 I didn't find anything, to be honest. Okay. And then I went back to LSE, and I decided that I'll do my master's degree on private equity in Bulgaria. But as you know, the problem was there was almost no private equity in Bulgaria. So we had a lecture by the European Investment Fund, and then I went to the person presenting and asked, what can I do? I'm doing my master's on private equity in Bulgaria. Can you establish contact with anyone who is doing anything in the space? Because back then I didn't have any contacts. It turned out that there are people interested in the industry, and there are people that are putting efforts into creating the first funds, but I didn't know it. So the European Investment Fund, they introduced me to people in Bulgaria who were doing this. And my master's was based only on interviews because there was no data, any data.
Okay. How many funds were?
Well, in 2014, I managed to speak to two funds that were establishing themselves now, and others that were in the process of applying. Because back then it was the first Jeremy programs were coming into place. So fortunately, I got a distinction on this master's thesis, and I went back to Bulgaria, already graduated, but without work. And then I started talking to all the people that I had interviewed before, asking if there was any opportunity for me to start working in the private equity. But as you know, the industry now is small. Back then it was maybe 10 times, 20 times smaller than now. So in the end, I had actually really good luck because I met Elvin Guri and the team of Empower, and this is how I started. So it wasn't an easy way, so to say. It wasn't like something straightforward that just happened. I would say it required some efforts and good luck.
What kind of work did they find for you back then? That was Empower, right?
Yes.
Okay.
Well, we were a small team and we were trying to support each other with anything we could to establish the fund, to start the investment process. There were a lot more experienced people than me back then. I was on associate level, but because it was a small team, it gave a lot of opportunities because basically it allows you to be involved in many more processes rather than what you would have been if I started in a large private equity fund in London, for example. At least this is how I felt it back then. And this is how it all started.
Yeah, in a way, it's also preparation for the entrepreneurial path, because when you're working on a small team, you're pretty much in the startup mode.
Yeah.
I think launching a fund is, in a way, also similar to launching a startup company. At least in the beginning, from the business perspective, you're having the same jobs. I mean, you need to align the team around the same vision, around the same values. You need to find a way how we're going to work together. There's so many business operations that needs to be established, and everyone is doing everything. Everyone is responsible for everything. Okay, interesting. And did you find a large discrepancy between the business cases that you've studied in London and the way that you were then practicing investments in Bulgaria?
Yes, this was actually a huge hit for me because I was feeling comfortable and confident when I started because I had seen a lot of cases. At least I felt that way. But then when I started, I realized I knew nothing and the environment was completely different. The type of companies were different. The industries were different. The size of the market was different. The efforts you had to put in to make it work. So it was basically a lot of learning on the whole experience, I would say, meeting with a lot of people, trying to understand them, being open to feedback, because it's not just you transfer from one country to another and everything works. It's not like that. You need to understand the mindset of the people to try to establish yourself as a person they can trust. We have an educational process. Many people still, especially the later stage companies, they're still not much aware of our industry, which we are hoping and trying to change. But very often we meet people when they hear the word mezzanine or mezzanine investment for the first time. And then you start from a different angle. Like, you cannot just give them a term sheet if you like them and you have done your analysis. You first need to spend time with them, explain, give them examples, send them some materials so that they feel comfortable into entering such a deal, because a good deal is always if both parties are completely aligned, and they know what they win potentially and what are the compromises they must make, each party. And if this is not clear, I would say it's a recipe for a bad deal. So we need to put a lot of efforts into the first process of deal structuring, sourcing the companies, and aligning the interests from day one so that we have better chances of success.
And how was the environment, the ecosystem back then? I doubt that you easily found companies that you can invest in. But compared to today, was it more difficult? Because now you have also much more competition, if you look at it.
Yeah, I would say it's different. I cannot say which one was more difficult. Like today, for example, the ecosystem has evolved so much. We have 18 funds. We have 500 million under operations by investment funds in Bulgaria, which is amazing. This is huge growth for the past 10 years. And I'm very happy and even proud that I have been even small part of this.
Yes.
Because I see the effect today. So many more founders, especially the early stages, the seed stages, startups and scale-ups have evolved a lot and dramatically. In the later stage, I think we're still missing more funds and more entrepreneurs in their later stages that are actually interested into receiving an investment. Because with a startup founder, when they meet you, they already know the funds, they know the ecosystem, they know what type of instruments they can get, they know some sort of valuation techniques. While with, for example, experienced entrepreneurs who are super successful and have built a company from scratch for the past 20, 25 years, they don't feel that way. For them, this is something new. They don't have a lot of peers to connect to, so that they feel more comfortable with receiving an investment and discussing with an investment fund. So I would say that we all need to put also a lot of efforts into this space as well. And now I believe there will be more opportunities for late stage investment, because first, the whole ecosystem supporting the startups and scale-ups, I hope many of them will be successful and go for the next level of funding. But also the family-owned businesses in Bulgaria, more traditional businesses in Bulgaria, many of them actually have huge potential, because they are growing slow, and they are using only bank financing, but many of them have ideas, have strategies, can digitalize some of their processes, can improve their profitability. And they need a partner to do this, because the investor is not just the financing person. There should be a partnership. There should be a mutual support, so that the investor helps with certain things for this company to succeed. And with the later stage companies, I believe there is very, very high potential.
Oh, what kind of percentages of your portfolio are companies that have you as their first investor, who are maybe bootstrapped so far, or they have been receiving, I don't know, some kind of like loan instruments from the bank, some kind of like bank financing, but they're for the first time in contact with an equity investor?
Well, I would say 85%.
That's huge. So
Yes.
you have a lot of education in the process that you need to do.
Yeah, well,
Okay.
it was difficult to pick the companies, I would say, that we finally invested in, but they are all validated business models with certain investment theses that we can support. And also, there are certain traits of founders that I personally like a lot when I see them. And the first one is discipline, and not in terms of just doing the things that you need to do, but having a longer term of work that suggests that you have actually been engaged in this, you have not quitted, and you are emotionally resilient to everything that happens to you. Because to be honest, I don't believe that success of one company is a black swan event, like something happens and it is successful. I believe it is the result of thousands of small steps that you take with discipline, with focus in the right direction, and then at some point you have the success. And it's similar to an egg, for example. When you have an egg, many people notice when the egg hatches, right? But before that, you have a huge period of incubation. And this takes a lot of efforts, a lot of time, and a lot of resilience, so that you can come up to this particular moment when the egg hatches. And this is how I see success. I don't think it just happens. I believe you really need to put efforts into the incubation period and be emotionally stable and resilient, so that you can come to this place where, for example, you go for a later stage investment. And once we see teams, for example, who are together for 6 years, 7 years, and they have been together and they have evolved together and come to this place where they are ready for Series A, B, C, D, this shows a lot, because also as a founder, I know how much it takes and how many times they have been wondering whether to quit, whether this is the right thing to do, whether they are not wasting their time. And I would say this is valid for all the companies, to be honest, that we invested in.
I have always imagined the process as at first it's very cumulative. So you put an effort and an effort and an effort, and it's basically, the value that you're creating is based on an accumulation, and it's like a sum. Yeah.
Yeah.
But then at some point you reach a point where the growth becomes exponential. So you have put all these efforts, yeah, And then at some point, when you put the next one, you have the moment where 3 plus 3 is actually 39.
Yeah.
And I think the big science is, when is this tipping point going to come? Yeah. When would your efforts contribute to an exponential growth? I think this is something that we are trying to figure out, and we don't know when this is going to happen. You can do many years something by the book, and the tipping point may not come, or it may come. And it's only after often that you understand, okay, this has been the tipping point. Maybe it's also, I don't know, in a way, luck. Yeah.
I'm sure there is a huge role of the luck in people's lives in general.
Yeah.
Like, whatever you do, you always need some luck. You need this one client who is super important for you, or this partner who is valuable for your growth. But generally, I trust one philosophy about the hedgehog concept.
Okay.
You know it?
No.
It's from one book, Good to Great.
Yes.
I mean, it's not me that came up with it.
I know. Yeah. But still, explain it. I love this book. Yeah.
Yeah. So what they say there is the following: like, if you have a hedgehog and a fox fighting, the fox comes with new strategies how to fight, how to eat the hedgehog every time, but it's not successful. While the hedgehog can do only one thing, which is to bow up at the right moment.
Mm-hmm.
And it does it perfectly. So who is the one winning every time?
Mm-hmm.
The hedgehog.
Mm-hmm.
If this hedgehog really can do this one thing but perfectly every time, he's the one winning every time. So translated to the business, I would say that this comes up with the focus. Like, first you need to understand your capabilities. How can you get this exponential growth? Only if you are really, really good at what you're doing. It's not only luck. And how you're really, really good at what you're doing if you're following the your hedgehog, which is the thing that you might be the best at, even with additional efforts, with additional support. But where do you see yourself being the best? And what I find is that companies following such a strategy, where they don't spread around, they don't try new strategies, tactics all the time, pivoting every 2 years. They just find the thing that works best for them, that they are the best at, and they grow it. And then at some point, regardless of the market niche that you're entering, there is potential for exponential growth if you are the best, or one of the best in this spot. And for example, in my own entrepreneurial experience, I have tried not to spread around. I want us to be the best at what we do and nothing more. Because all the time some suggestions come, like offers for partnerships, something new that you can try in a new country, but it distracts you, I believe. And in the end of the day, it could bring you some growth, but if it's not the focus of your endeavor, it might never bring this exponential growth that we all look for.
And how do you find out your superpower, your hedgehog strategy? How do you find it? Is there a methodology?
I don't know. I think this is $1 billion question. I'm not even sure I have found it. But it's always part of the experience. Like, you just need to be open for feedback, and you need to understand what people actually like, because it doesn't matter what you like. It matters what your customer likes, what your market requires. And for me personally, I have been very open to feedback, and I believe this should be the case for every founder and investor, because you need this willingness to get to the hedgehog, to overpower your ego and your willingness to always be right. Because every founder, they have in their mindset, including me, I mean, it's always this case, they have in their mindset their perception of themselves, of their company, but it's not always this that is the hedgehog concept. So you should be willing to take the feedback from the customers, from the market, and apply it so that you actually understand where your capabilities can put you as one of the best in your area. And this also comes with not like offering all the products, all the services. Like, for example, I enter a certain industry and then I want to be everything for this industry.
An end-to-end solution.
Yes. Generally, this end-to-end solution might work and it could be a unicorn, but it takes a lot of steps. And for example, if you're entering an industry, you cannot offer something to all the stakeholders. You need to pick the stakeholder who needs you the most. You start from them and you build up and build up and build up. And in the end, you might be interesting for all the stakeholders, even though this is very low probability generally for any business. But this generally, this is what I believe should be.
How much of the perspective that you have as an investor is helping you be a better founder, in your opinion?
Well, that's an interesting question. To be honest, I have never thought about this. Maybe the first idea of founding the company came from my experience as an investor. Because what I saw as an investor was basically that there were a lot of companies in all types of stages in their lifespan which lacked financial expertise. And how this translated into the business, basically, first, very often they couldn't manage their cash flows. And especially for the earlier stages, this could be the death rope, so to say, because if you don't manage well your cash flows, cash deficit is a death sentence for any company. Second one, pricing, budgeting. They didn't have any processes how to track actually their results compared to the budget, how to came to the signals that actually show you what is going well and what is not, and based on data, not based on your guts, for example, or based on a talk with someone. You need data to have these decisions, and this data comes from finance for me, especially because it shows you how you deviate, and then you come to the questions like why, how does this happen, why did I assume it would not happen this way, and this gives you clues and this gives you insights. So back then I couldn't find a solution for companies that we worked with. For example, some of them didn't have a need for a full-time CFO, a lot of them, because they might be still small companies, and others have, for example, had just general accountant, but they didn't have a CFO, and the work of the accountant is another perspective. It's again like a work and a profession which is very helpful for founders, and of course it's a must, but the point is it's in another area and it's another space from the financial analysis and the CFO function. And then I decided that I wanted to have a company which supports startups, scale-ups, and growth companies in the stages before they actually need the CFO with the C-level expertise they need, meaning how do you budget your year? How do you track your actuals versus the budget? What is the reason for your success or lack of success? And get these decisions early on, because if you get the signals as early as possible, then you have time to react. If you just come up and you see I have cash in the bank for 3 months, then you don't really have what to do. I mean, it's a desperate situation which doesn't guarantee any success, even if you start right away to do what you do in terms of fundraising. So we started then, and I'm very happy because we have a team there, amazing team, and they're all senior finance professionals working with more than 40 companies across the globe. We have in 9 countries currently. And we have only one churn client for 3 years, even though, and because it was a bankruptcy case. So they just couldn't fundraise anymore. But I'm really happy with this. And actually the whole idea came from my investment background, because I thought that both investors and founders could find it valuable.
I wonder how much founders actually want to take a closer look into their finances, because in some ways, I believe that if you start looking closer at it, you might be you might start worrying much more.
You might be super scared.
I think you might actually become super scared. I've been through a situation like this, and the founder still actually managed to get out of the situation. Although if you looked at it on paper, it was like, you might be actually approaching bankruptcy, guys. I mean, you need to be aware because there are also legal obligations which are connected to being bankrupt. You are responsible of knowing when you're bankrupt. You don't look at your bank account.
Yes.
That's telling you a totally different story. And I believe that because founders were a bit more resilient to my warnings, was one of the reasons why they managed actually to overcome the situation. And maybe not worrying about too much the money is part of being a startup founder. I don't know. I'm just, curious about your experience.
Well, it depends very, very much whether the founder is actually very much willing to accept advice in terms of finance. Because if they are now, they are much more than what it was like 3 years ago. Because all the clients came proactively, the founders come proactively. But to be honest, I would say that founders need to trust the people from their finance teams and need to get on calls and talks with them at least once a month to discuss the results and to discuss implications. Because otherwise you might miss a lot, and once you miss a lot, there is not much you can do. And to be honest, we had startups, for example, coming and saying we want a CFO, but then I see their finances and I see they have 2 months of runway. So even the best CFO in the world cannot help them at this point, like with 2 months of runway. And we helped them, this particular case, pro bono, just because we wanted to support like a company like this. We gave them some ideas, some solutions, and in the end they managed to extend their runway, but 5 more months. I mean, it doesn't solve really the problem. But then 1 month later, I went to a conference. I was in one of the panels, and before me was one of the founders of this company. And then he made the perfect pitch of a perfectly sound company, which is only growing, which has huge prospects, opportunities. And I was impressed how do you do that? Because, for example, like as a woman also, like I don't want to tell something which I'm not certain of. I mean, I would never say if my company is collapsing, I would never go on like before a public audience and explain like everything is going well. Like I don't really see this fake it until you make it to such high level as successful, because like with this, what can you do? In the end of the day, someone will come to you and they will be interested, but once they see you have 2 months of runway, it's another conversation. And we have been in a position like this with some companies that are exciting. They have perfect go-to-market, nice products, but their business model is not sustainable at all. And they come to us and they present a growth case, like they need financing for growth. But once you open the books, what you see is another picture. What you see is that the business model is not sustainable, and it's not investment required for research and development, for example. I already have a business model and I want to enter new markets, develop new products. This is a growth case. We see a business model that's just operating at a loss because their customer acquisition cost, for example, the cost of acquiring a new customer is 3 times higher than the lifetime of this customer. And this could never be successful. This could never come to a profit, just because the whole business model was built in a way driven by very expensive marketing. And okay, you get the customers, but this growth will not be sustainable. It won't end. It won't be forever.
I can imagine that, especially in the times that we had until the recent year, where we were actually looking mainly at the unit economics of growth. Even for investment managers, it was hard to differentiate between those companies who are growing their customer base based on very, very expensive marketing, but they're growing. And those who actually have found the formula for sustainable growth. Yeah. And maybe somehow, the more you invest in marketing, the growth could be exponential. I don't know. I think it's hard to differentiate between the two, to tell between the two cases. And your finance background is probably helping you here. Yeah.
Yeah, well,
it's still, I'm sorry. Yeah, go on.
What I can say about this is there are certain cases where you can invest a lot in marketing, get a huge market share, and then monetize it. I think this is what you're talking about. Like for companies that would invest a lot in marketing, get the higher market share, and then monetize it and to increase the pricing. This is the strategy of Temu, for example, Temu now. And these are giants in the space, right? The point is what arguments would make this valid for my business? First, it would need huge amount of liquidity. And second, it would need time. And the point is, do I have these two? And in the current market, there is not so much liquidity so that you can spend on growth at all costs, especially in our market. I mean, if you're Alibaba, for example, yes, you can. I mean, but we should measure our strategies against our capabilities and what we can do with them. Because if you take 1 million euro investment or 5 million euro investment, you cannot invest 70% in marketing, right? Because in the end of the day, it will still not suffice if you don't have a clear goal. What happens after this, and how do you actually monetize? And now the investment in general has been decreased this year. The 2023 finished with 42% lower investments than 2022. I mean, it's more difficult to fundraise, and that's why I just don't support plans that rely on spending the money. I need the founders to have the mindset of investing and not spending. They need to think about every cost as investment. Like, why is it worth it? Why should I do it? And we have seen a lot of companies with the other mindset, like growth at all costs. I need to spend a lot now because everything will come up eventually once I'm here. But it doesn't really always happen that way. I hope it does. I wish good luck to everyone who tries it. But I personally don't believe in this strategy. I believe that you should be focused. You should be investing the money of the investors and having a clear way on how each one of these costs that you incur today will help you in the future. If you have the answer and you know, even with certain probability, because we know it's not always certain that things will happen the way you think. But again, like,
are there
it's a mindset
that surprised you?
That surprised me.
Yes. Who, I don't know, what happened with the founder who made the perfect pitch having 5 months of runway?
Well, the company is still operating, but no one is receiving salary.
Okay. So they're currently bootstrapping, so to say.
Yeah, but for how long can you bootstrap? I mean,
I still have appreciation also for these kind of teams and these kind of founders because they show a different level of resilience, I must say. I think it shows a different level of conviction when you're actually ready to operate for a certain period like this. Of course, the decision when it's not worth it, when do I need to stop doing that, is very important. But if you have this mindset that you're actually willing to go through really, really hard times, just, to serve the mission that you have dedicated to, I think it shows huge, strength in character. And I have a huge respect because crisis situations and troubleshooting in a company, it just happens at some point all the time. And if you have the emotional resilience that you might be able to look for out-of-the-box solutions in a crisis situation more easily than if you are someone who panics very easily. So if you are willing to go through shit,
yes,
maybe the next challenges that will actually come at you in the future are going to be solvable more easily because you will be, we survived last time, we're going to survive this time as well.
Yeah, I completely agree with that. Completely agree. And this is exactly the point about resilience. And this is why I'm saying when I see founders teams that have been together for 6-7 years and they're still together and they're still trying to push it, the whole enterprise up, then it provides really strength of character. It also gives you a clue of their team dynamics, that it's stable, and that they're willing to go through difficult situations together and still survive. I completely agree with that.
Yeah. But I guess the perspective of the investor always needs to be a bit more pessimistic and a bit more conservative, because after all, you're managing the money of someone else. So you are responsible for that. It's not only about, we're going to wait for this breakthrough moment and we're going to support you till the end, guys. It needs to be done with responsibility and with a certain logic that you can actually explain also to your LPs and to your shareholders.
Yes.
Okay.
Completely. That's why I think the role of the investor, it's a partnership, to be honest. It's not just investing in one company and then, like, we don't do pay and spray and pray, so to say. We focus on the companies that we invest in, and it is very important that we are together through the whole strategic objective of the company. Like, what do they want to achieve? How do they justify it? It's a lot of discussions with this regard, so that we are actually aligned. And very often we ask questions, a lot of questions that they need to answer, and many times this helps them a lot also to revise, understand, think of other ways or improve their goals. But I always imagine investment, like in later stages, as building a house, because in our stage, we already have a company, it's operating, so you have some sort of a house, but then you want to grow it with 5 floors more. The point is, first, you need very strong fundamentals, right? So if you don't invest today in building your processes, corporate governance, corporate structure in a way that can support growth, this is the first thing that collapses. And if your fundamental collapses, the whole house is broken down. And there are a lot of examples in the industry as well of such companies, not in Bulgaria, that I can think of.
And what do you look at if you want to check if the foundation is strong? Which are the main pillars of the foundation in a business?
Well, organizational structure. We need to see, like, people who is involved in each process, which are the processes currently working, which processes need to be further developed. All business elements, like in terms of sales and marketing, what is the goal, what is the current strategy, current process, who is responsible, research and development, general administration, corporate governance, controlling and finance, because you need all these to work combined. Like good business operates only if all the elements are connected. So and for you to get them connected, you need to build a process. It doesn't work with, I'm used to calling you when I have this problem, but then if you're not there or you're on vacation, I don't know what to do.
Especially when the company grows, those people who have the knowledge and can easily talk between themselves and solve certain situations, this kind of model is not going to work, because you need to involve other people. The founders will be then going out of the operations of the business. They need to start thinking about other things. They need to take care of the whole team, because at some point everyone comes at you and they have like a different request, they have like a different problem, and so on and so forth, and you need to be available there for them as well. So I guess if you don't have the processes and you still have these bottlenecks, things are going to collapse.
Exactly.
Okay. At the same time, I believe it's an art to establish a livable process in a company. It's one thing to have it on paper, and it's a different thing to make people actually stick to it.
Yeah. But I agree for maybe smaller companies, but where we invest, for example, if they get an investment 3, 5, 8 million euro, they need to do it. I mean, otherwise, we really, all of us risk
Yeah.
Because they will be successful in their sales and their product, but then if some of the processes don't work, you create bottlenecks that can just break the whole thing.
I wonder, when you started developing also CFO Insights, and it actually started growing very organically through word of mouth recommendations of your customers. You limited the churn that you have. You have one customer that actually, at some point stopped working with you. To what extent are you answering your own requirements and questions as an investor while you're being a founder? I guess it creates like an interesting conversation in your head.
Yes.
Do you catch yourself maybe doing stuff that as an investor won't be nice to do? I don't know.
Well, I think there are some principles of corporate governance and generally operating a company that should be always obliged. I mean, I would never do something with my company that I believe an investor or a partner wouldn't support or would not be ethical or something like this. I mean, I try always to do my best, and then we see how it goes. I mean, you're not always successful. You have some troubles. You need to overcome them. But up to now, I have never done anything that if I'm an investor, I would not support.
Okay.
Yeah. But I mean, maybe there are some situations, I don't know. Also, because you don't have to respond to any other person's requirements. I mean, it's my decision
I was just about to ask you if you have also investors in CFO Insights, or are you planning at some point to raise an investment, or is it something that you would like to grow in a organic, healthy way?
Yeah, well, this company was break-even starting month 3, so I was never in a position to look for an investment. We were just trying to be smart, and this is also about not like back then. I believe if I had started looking for fundraising, maybe I would have been successful. No one knows, of course, but the point was, why should I do it? I mean, if I have a clear need for financing to do something, then yes. But in our case, for example, I subsidized it in the beginning, then it turned out profitable, and it's growing by 300% now a year, which is amazing, because we don't spend anything on sales and marketing. It's just organic. And I don't think I will need investment soon, unless we come up with a huge new strategy to do something. But this is also something I need to discuss with my team, because they are the key people there.
Did you manage to define already like a sort of a long-term vision for the company, or it's okay, things are going well? Let's see.
I have a long-term vision of the company. First, usually with service companies, because we are a service company, the huge bottleneck is human resource, because when you to be growing, you need for every company a huge human resource to be supporting the growth, and this is risky and this is slow. So the only way for a CFO service to grow faster is to include a lot of digitalization in the whole process. I mean, during the analysis part, the recommendation, not the recommendation, but we need to do digitalization with all the analysis, all the data imports and exports, and get also artificial intelligence to support us doing this faster. And then the human behind should be only doing the recommendations and providing the insights, but he should have already the data before him or her analyzed and ready to be read, because I think the key value here is someone to read your story behind the numbers, to get to the insight what's going well, what's not going well, and to give you a proper recommendation on good things that you can do with it.
Yeah, of course. But I think sourcing the data could be also a challenge, especially for fast-growing companies, because they have never really established the processes where they have the data in one space. There is no single point of truth. I mean, you have the accountants, and they're always like working too much in the past. At least it was hard for me to have one up-to-date data so that I can see what is actually happening, where we're right now. It's hard to have this overview. Okay. But CFO Insights is not your first company. Actually, I think when we met for the first time, it was because one of our team members was just giving birth, and we actually bought her a box to remember. And that was back then, I think it was actually in Puzzle co-working. And at first I always kind of like associated you with the box to remember, which was a social enterprise. I never imagined that you would be this hardcore finance lady, the CFA, who is actually, working in a fund, but at the same time doing her own enterprise, and at the same time a mother herself. I think it may be coincidental also with your maternity leave. Tell me about Box to Remember. How did it came to existence?
Well, that's another interesting story. Like my career path is generally investment and finance, but on my it's more of a hobby that I am really involved in social entrepreneurship here in Bulgaria. I teach social entrepreneurship in the Sofia University for 7 years now.
Okay.
And I do this pro bono, so to say, because I truly believe that some of our social problems can be solved through business logic. I don't think that it's just the community itself will help itself and will solve all the problems in education, healthcare, like public services. I don't think the government or the country in general, like public resources, can just pop in and like recover everything that we see is not working properly. And that's why I believe that if you apply business logic to social causes that works, then you can do great things and you can scale it, and with this you can scale your impact. So that's why I support this for 11, 12 years now, and I still believe this is the right way. So Box to Remember was created when I had my first child. It was a coincidence that my twin sister had her first child at the same time. So we were doing a lot of walks around the parks. And at some point we decided that we needed to do something with our time. Like, we were mothers for 2 months now. And we just didn't.
You were just bored.
Yeah, I mean, it's not bored, but it's a different experience. Like, and anyway, you spent a lot of time in the park. Why not use it to build something and to figure out something?
Of course.
So this is how we came to the idea of Box to Remember. It's not like a huge enterprise or some huge success. I would say it was built on purpose. We wanted to create a business model that supports the deaf community in Bulgaria by giving them opportunities to work and actually earn their own money. And I believe this is much better than having them being donated with money. You need to empower them. You need to give them opportunities to learn to work and to feel completely
But just to be clear, so when you say the deaf community, you don't mean the developers, but you mean people who actually have some kind of hearing deficiency.
Yeah,
right?
I certainly don't think developers need so much support.
Yes.
I mean the deaf community, like people who have hearing problems. And then we decided that in our company we will employ only people who have 70% or more
Hearing loss.
yes, hearing loss, or it's not disability, I couldn't say. That's why we call like all these people with different abilities, because I don't think it's a disability. I think just it gives you another perspective and other skills that you might and could develop.
Yeah.
So we started with Box to Remember. It was during the maternity leave. So it turned out well. It became profitable. It wasn't growing very much. Also because we didn't spend too much time on it, because my sister, she is a lawyer and she was working in her legal firm and I was in the investment fund. So we were trying to do whatever we could, but we found the perfect lady. She's called Diana Aladzhova, who took control of all the operations, and she was very open to new ideas. She was coming up with opportunities all the time. So in the end, we decided that she should be responsible for Box to Remember, and this is how we transferred the whole enterprise to her. And now it's still working, and it's doing well, I believe.
Well,
Yeah.
how do you do all these things in your time? I do believe that you, just like any other people, have 24 hours a day, and you have 2 kids in the meanwhile. You're a very active partner in Silverline. We see you involved in many of the deals. We communicate very quite often actually directly to you, and I'm sure that you're also pretty much involved in, helping your portfolio companies. You have on the side an enterprise which is growing and is developing fast and is growing 300% a year. Okay, maybe with the social enterprise your role is now limited, but it's something that you do on the side while you were on maternity leave. So how do you, tell me about your hacks. How do you do that? Because for me, at this stage, you should be overloaded. And I'm talking to you, and I actually see someone who is very energetic, who is, in a stable position when it comes to mental health. How do you manage to do that?
Yeah, well, I don't know if I have a certain hack, to be honest. And another thing is that it might seem like this, like I'm doing everything, but it's not the case at all, because I have amazing people working with me.
Okay.
And very often it turns out that I am the face and people think I did everything, but there are like 10 people that have worked like crazy and have done a wonderful job, and their names are just not in here. So the first hack is actually having great team members. That's why I'm very grateful for the team members in CFO, like all the senior professionals there working for CFO, because without them we wouldn't have been here like today. And the other thing is that actually I find a great balance between the kids and the work. Like when I work, I try to be 100% concentrated, and I don't take breaks. Like I don't take any breaks during working time.
How long can you work focused without breaks?
Well, a lot hours maybe. Yeah, the point is that I know that I need to be efficient, because I need to finish everything by 5, because at 5 I would go pick up my kids from kindergarten, and I don't want to lose this time with them. So I know that I have to be super efficient, and I work like very focused for these hours that I work for. And then when I'm with the kids, I take a break, and sometimes it somehow it re-energizes you, like playing all these kids games. Like they are 2 and 6, so it's not the smartest games we play at home. Especially the small boy, he only likes games with fighting. So yeah.
Okay.
Yeah.
Okay, so your brain rests while you're playing with the kids,
Yes.
so to say.
And sometimes if I feel that I'm becoming overloaded, I'll just stop everything. I'll go pick up the kids and we'll go somewhere with them. This also happens often, but then when we come back, I'm relaxed again and I can do it once more. So I think it's very important to know yourself and to know if you're becoming overloaded, and if you feel that your brain cannot do anymore, then you just stop, like regardless of what you have to do or what are the tasks before you, because in any case we are not healthcare people, right? So if I delay it with a couple of hours or even one day, like no one will be really hurt. I mean, of course there are some situations where it's force majeure, but I wouldn't say these are the majority of the situation.
Yeah.
So I think it's very important to know yourself and to know what gives you balance, because for me the kids give me my balance, and this is what brings me a lot of happiness somehow. Like that's why, of course, it is a trade-off, of course. I mean, for example, I don't like traveling a lot at all. Even I try to spend as much time with them as I can.
Okay.
It's a trade-off always. I mean, but I wouldn't say you cannot find the right balance. I think the right balance depends on each person. There is not like a the recipe for balance. But the other thing is if you really like what you're working. I think this is another key thing, because if you're doing something and you feel like this takes out of your energy, or you're feeling depressed, or it's not something you find valuable, I would say that 1 hour working this would be like 10 hours of doing something that you actually like.
And which are the things that are actually draining you?
And the things that are actually draining me, well, reporting, regulation, and all this administration. I really don't like this part of the job.
I always thought that finance people should like these things.
I don't like it at all. I like the creative work. I like when you see the numbers to try to read them, to strategically think what happened, why it happened, how it can be improved, what can you do to support it, what ideas can you give for them to be better. But crunching numbers, I don't like at all. Like all type of administration work, like reporting, regulators, and things like that. It's a must. I mean, no one can have a job that they 100% like everything. Yeah. Like you should be aware there are some tasks that are not the most the creative ones. Yeah,
it's true.
But
so in a way, you like the storytelling part of the financing.
This is what I like the most. I like to see the data and the story, and to try to read the story behind this data.
I think it could be actually an interesting way that we can collaborate when we use like real cases where you just look at the numbers, or you have the numbers at first, and then I don't know, maybe you or someone from the team starts reading them, so that I don't know, more and more people see the numbers talking.
Exactly,
it's worthy to look at them. If you have them,
yeah,
I think I would be myself very interested in this.
Yeah,
part.
Of course.
Yeah,
we can do a case study on this.
Yeah,
there are some which are very interesting, like how through finance and numbers actually you can realize what is wrong with the business model, and also where and when it became wrong, and where it became defective, and then how can you have known before it's happened that it will happen.
Yeah.
And this is actually the numbers. If you see budgets and actuals, you can read this story.
I wonder, is there a moment in your life where you can stop for a second, please? And you're going to tell yourself, yes, I actually did it. I made it. Because I see you running at the same, all the time, and you're achieving so much stuff, and I don't even know. Cannot even imagine you like resting. But when, at what time, and what kind of moment do you feel like you're going to deserve it, and you're going to tell yourself, yes, I made it. Now I can actually stop for a while and rest. I'm sure that afterwards you will have the next goal already in head.
Yeah. Well, I haven't really thought about this. Like, what is the point in the future where I might rest? I'm always thinking about the new things that I really want to do.
I see that.
But for me, like, success first, in terms of the investment, success would be if we manage to get really good returns on these investments and help the companies establish their goals. And once we exit the investments, they actually feel that the fund contributed to this success. I have a story like this from the previous fund, and I really hope that this will happen with the founders in this fund, because I think this gives you a lot of courage to move forward as well. I mean, I believe that success could be defined only if, like, all of us in this partnership feel that we were successful together.
And what about CFO Insights?
About CFO Insights, I think success will be if we really manage to establish presence in the whole region, because now we have 40 companies spread across. But I really want us to be the CFO provider for the whole region, because we already have the expertise. We need more effort, but as you see, it's not something that just happens. I always go to this disciplined approach. It's a marathon. It's not a sprint. So step by step we're getting there, but I don't feel like there is something huge that will just happen to me and things will turn out great. So I believe that with these steps in the right direction, we'll eventually be the regional CFO provider to go to.
I hope that you would manage to find the right mini moves to get there, because I do understand that every little action contributes then to the same, or actually to the big vision. You just need to have the big vision.
Yes.
And then it's much easier to say, okay, this is a right step, this is a wrong step. We say no to that, but we actually go with it. Vision is very important because there's so many opportunities. I think this is one of the things that I personally realized on a visceral level, that when you're steering a company and you have a good imagination, and maybe because I also have this sales mindset where I see opportunities everywhere, it's very hard to pick the direction that you need to focus on, because there is so much you can do with this company. You know, you can go here, you can go there. And everyone keeps on telling you, yeah, you can try this and you can try this, and the schizophrenia becomes even bigger.
Yes.
But no one tells you, how am I going to pick the one thing that I need to focus on, where I actually become the best at what I do, that is going to be my superpower, that is going to differentiate me from the others on the market. No one tells you that.
Yes,
Everyone comes at you and keeps giving you advice, and your head is also functioning this way with, there is so many possibilities. I can do that and that and that and that and that and that and that. I have like at least 10 scenarios in my head about the recursive, which we can pick. And it's very hard to pick one. Yeah. I hope that you would find the Hedgehog strategy for both the fund and also the CFO Insights, so that you can make all those mini steps. And I have no doubt that about your discipline. I always admire people who know how to be disciplined. It was always something that I unfortunately lack. Operational excellence is not my forte.
Well, if we are sitting here, I believe you don't lack it. Like, people who lack discipline, they're not here, usually.
Maybe. And maybe we also need to start looking a bit closer at our finances. So let's see.
I strongly recommend it.
That 2 years ago. I think now it's time. Thank you, Diana, for this wonderful conversation, and also for sharing your piece of wisdom with the others. I'm also very happy when we have women who are at this point. I think we do need more of those positive examples, which are coming from our gender.
Yes, I completely agree with that.
We don't have enough of them. It's much easier for us to find guests for the podcast which are male, and it's always like, yes, but let's go and find women. And whenever we actually see a successful woman, I'm always inspired to invite her and to talk a bit more about that.
Yes, me too. I'm trying to support this as much as possible.
Yeah.
The point is, I think as women, we should really counter the imposter syndrome of other women, because I think this is something that really hurts their opportunities.
Yes.
Like, very often women just feel like imposters, like they are not the right person for this.
They're not
thing.
good enough.
They're not good enough. But the point is, I think they are, and a lot of the people feel they are, even if they're not. So
sometimes we stand in our own way.
Yes.
So people would trust us, people would see the potential, people would be ready to invest in us, to support us, even without any opportunistic reason behind that. And sometimes we just stand in our own way because we don't believe that we can.
Yes.
Or we doubt it too much.
My recipe for this, because I also have some part of this imposter syndrome, like especially in the first years of my career, I always felt like, am I good enough to do this? Like, will I be able to comply with all the requirements for this job? And then at some point I decided that I should not doubt myself. Like, if I'm here, I'm the right person for this job. But I should always doubt my instruments. I should always doubt my approach. Like, And there is a huge difference, because in the first case, you doubt yourself. And if you doubt yourself, you don't have a recipe, you don't have a solution. But if you doubt the instruments that you're using, the approach that you're using, you always can come up with a better one, better solution. And it also improves your performance. So once I started doing that, like, again, I'm super critical of what I do. Like, it's not like I feel I'm doing everything perfect, not at all. But once you doubt your instruments, you still feel fine. I mean, your mental state is perfectly fine, but it motivates to look for alternatives, to look for another solution. So this is what helps me, for example, to make
Distance yourself from the way that you're doing stuff and who you are.
Exactly. You never doubt yourself, but you always doubt the approach and the instrument. At least this is what helps me. And I'm trying to reflect this also with other women when I speak with them, because I very often see they don't have an argument why they can't do it. They can. They just feel doubts over themselves, not over the thing they are doing. And I always cast the doubt on the specific thing, like specific model, specific company, specific project. Like, here you can do better. Here you have not done your best, but not you.
And I have to say that over time you can also realize that maybe partially it was the imposter syndrome that made you more successful in what you are, because you always prefer to be more prepared, to have a more solid foundation when you make decisions, when you make a statement, when you make prediction for the future. You always countered your ideas with counter arguments, so that when you start pitching them or explaining them, you're actually better prepared for what can come. It's a fine balance, though. It's a fine balance when this kind of self-criticism becomes self-destructive. It can make you be more prepared and, be very solid on the ground. And at the same time, it can also destruct you. And I think navigating exactly through this balance is something that in general nowadays, I believe, makes women actually more prepared for business, for all sorts of business functions. They're already the better educated ones, yeah? But we are leaning too much towards the self-destruction part, to the self-doubt part that is actually standing in our way. We just need to move not to the other extreme, but a bit more to the center.
Yes.
Yeah?
Yeah.
And it is hard, especially when inevitably you start making mistakes and when you start failing. I think this is part of our experience. But I remember long ago, I was listening to a keynote by a pilot, Lufthansa pilot, like a airplane pilot, where he coined a phrase that kind of like stuck with my mind, and he called it confident humility. In a way, you should be, as a human being, very have the humility that you're going to make mistakes. That's what people do. We are prone to make mistakes. It is inevitable. We're going to make them. But these mistakes don't necessarily make us actually bad professionals. Even pilots who are prepared, who have studied, who are actually, one of the most responsible professions nowadays, they also make mistakes. But if you start doubting yourself as a professional, this is when it actually becomes destructive. So I think accepting that you're going to make mistakes and then learning from them and then trying to make it better is going to be a long-term a better strategy than going always back to your core and doubting, am I the good one for that? Of course you are. There should be no discussion about it. Yes, you made a mistake. Everyone does. Men, women, it doesn't matter. Yeah. So, yeah, confident humility. Thank you, Diana, for this conversation. Thank you for sharing that experience that you had so far. I'm sure that there will be an eventful road ahead of you. And I hope that in a couple of years we will be still able to sit together and maybe reflect on what happened in the past years. It will be interesting to see how you are going to synthesize the experiences that you have in so many different worlds. I think at the end, we might actually come to certain patterns that apply both for you as an entrepreneur and as a mother and, as an investor. And this is going to be a valuable conversation. Thank you, Diana.
Thank you very much for having me.
And if you are just as passionate about innovation as we are, hit subscribe for the Recursive podcast on YouTube or your favorite podcast platform. We're everywhere. This podcast episode is supported by EBRD. Support to small and medium-sized businesses is an important part of the European Bank for Reconstruction and Development's mandate. Activities to support small businesses include direct and indirect financing through partner institutions. The EBRD's Advice for Small Businesses team provides the knowledge, the network, and the skills to help emerging businesses innovate, thrive, and succeed.